And we do think that the macro backdrop still seems to point to an overall range-bound market. But I agree that I think a floor probably has been found, unless we see dramatic course-changing events happen either geopolitically or domestically from a policy perspective. But I think barring those events, it seems like the floor has been found.
And the reason why I asked that, right, is because what you're mentioning are geopolitical concerns. You're also mentioning, policy concerns at a domestic level. But what about, I suppose, the fundamental equity concerns in terms of we're going to get a whole gamut of earnings coming through this week? And, a lot of people suggested that was partly due to, the weakness that we have been seeing in a number of these stocks, whether it be China tech or otherwise. Do you think that we're going to see a recovery there too?
Yeah, that's a very good question. I think it goes back to the economic fundamentals partly, and also whether you think the confidence has really improved. I think in terms of economic growth, it's not so clear that it's a lot of the recent stabilities really come from the manufacturing sector, coming from the industrial sector. These don't necessarily translate that well into earnings growth particularly for consumer-based companies, but even more broadly, the translation doesn't seem to be very, very high. At the same time, you're seeing all the high-frequency data showing that consumer confidence is still fairly tepid. Loan demand is pretty weak. So I do think that so far that macroeconomic stability from a manufacturing side hasn't really found its way into the rest of the economy, and therefore I think it might take some time before that can show up in the earnings growth. So this is one reason why I think we prefer to maintain our view for a range-bound market, and after a very rapid recovery, we prefer to take some profit.
Within that range-bound market thesis, if we just see a basic continuation of what we are seeing in terms of the tariffs or the tit-for-tat between the US and China, does that put that thesis at risk significantly? And I'm talking significantly here, not the 16K to the 19K you were suggesting, but is there anything probable in your mind that what we're seeing right now that could see substantive pressure being applied to Chinese equities from the US tariff institution?
Well, it's definitely a very fraught environment at the moment. Well, we're going into a very fraught environment in the coming month as we head into the election, as tariff seems to have started to come back. I do think that it depends on how high the tariff and how broad-based they will be in the next couple of months, and also for the next administration, what would that look like? There's certainly a scenario where this becomes a much more disruptive event for Chinese economy, particularly given that a lot of the sectors that have been driving the economic stability last couple of months has really been those electric vehicle sectors, these new energy sectors. So if they are to get fully caught in the crosshair of trade frictions, that could be a much more disruptive event, I think, for the economy, and thereby maybe for policymakers as well as for market sentiment.